Good morning, everyone. Welcome to our weekly Forex market analysis call. And this is in preparation for the week of August 7th, running from August 7th to 11th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money when you trade. And also, if you have questions about your individual investment needs, I recommend you talk to your investment advisor. All right, so in today's weekly analysis, we are going to start off with our Forex factory calendar, and then we will go into our charts. So I like to look at the entire week up front. So starting off here, we have inflation for New Zealand here. And Monday usually tends to be a little bit slow in terms of trading, so we don't have much going on. It's a bank holiday in Canada. And no major news coming out on Monday. Tuesday, London session is about the same. We have trade balance and government budget coming out, but nothing huge here. We have mortgage delinquencies for the US, which can be important if the number is increasing, but otherwise no red news for Tuesday either. Going into Wednesday here, building permits is it's a leading indicator, so it's an important number to pay attention to. And then other than that, we have oil inventories. The most important thing, as we see here, is the New Zealand official bank rate. So this is the interest rate. It's not expected to increase at this point. And then we have the monetary policy statement and the rate statement followed by the press conference. So lately, we have been seeing a lot of central bank activities. The monetary policies are changing. We have been in an environment of loose monetary policy for the last 10 years. And now that the wheels turning and the banks are starting to kind of realign and start, they're looking at tightening the monetary policies. As a result of that, anytime there's a central bank news, it creates a big movement in the market. So watch out for this one. Last week, we saw Reserve Bank of Australia. However, they did not raise their rates as a result of that. And also their commentary wasn't as bullish or hawkish as market was expecting. So as a result of that, we saw Australian dollar drop. And for the New Zealand dollar, we're looking for a similar thing. If they don't raise, well, they're not going to raise rates, but if they don't talk in a bullish or a hawkish way about their economy, if they express concerns around certain things, that will have a negative impact on the New Zealand dollar. So watch out for that. On the other hand, though, if they say that economy is looking better, there's, they're projecting good, solid growth for the country, and they don't express any concerns about the high exchange rate, all of that will be positive for the New Zealand dollar. So we have to be open to both eventualities. So keep that in mind. All right, so going into Thursday here, we have manufacturing production for the British pound, and then we have PPI numbers, again, another leading indicator for the US. But other than that, we have employment claims, but nothing huge here. And again, continuing on with our central bank thing, we have Reserve Bank of Australia, Governor Lau speaking. Again, that will be important for Australian dollar there. And Friday, we have CPI numbers out of the Eurozone as well as in the US. So all in all, it's not a crazy week in terms of the news, but there are a couple of key things that we need to pay attention to. All right, so let's move on to the charts now. Okay, so let's start off with our euro here. So the one big piece of news that came out last week was the non-farm payroll. It surprised to the positive side. As a result of that, we saw US dollar actually go up. So prior to non-farm payroll, or just lately in general, we have seen US dollar take a hit. US dollar has just been overall just can't seem to catch a break, and it's just been decreasing in value. So now with the non-farm payroll numbers coming out positive, we are looking at Euro US dollar weekly. We're looking at a pin bar here. So we are into our previous resistance levels. We haven't been at this level since November of 2014. So we are kind of into those highs. And at this point, this looks like a rejection of this, this level here, 1.1900. So based on this pattern here, the next thing we're looking for is we're looking for price to move back lower. So in this case, this is the tricky thing. This is what we'll have to keep in mind. If the price just comes into 1680, 1.1680, it could bounce up higher. So it won't turn bearish till we actually break this previous level to the downside here. So we need to be able to break either the candle body here or the bottom here for it to really turn negative. So this one could just be a pullback, and that's why we have to be careful. So I am looking for price to come down into this 1680 area, and then that will be the decision point, or even into 1650 area, and that's where the decision point will be to see if the price breaks below that 16, this pin right here, this one right here. If the price breaks below this, which is 1620 level, if it breaks below that, we're looking for a continuation down into this 1500 area, which is the next support and resistance. However, if the price pulls back but does not break that, that means it's just a retracement for another move higher. So 1.1620 will be the area level to watch, and this is where our decision will be made in terms of where the prices may be going. Right now, I am looking for a euro dollar to drop and come and test this 1.1620 area, and then we'll watch. If it holds above, then we're looking for a potential long entry for another move higher. In that case, the target would be 1.1980 level, which is this previous support and resistance level all the way up here. If it breaks down, then we are looking for move lower into 1.1500, so 1500 level. So that's our euro. If we go back into our daily, as we can see, price has given us a nice engulfing candle, and for in the last 3 days, price wasn't able to break this level 1900. So now we may be looking for another move lower. So in this case, the type of move I would expect is something like this, and a drop, and price to move back lower into this area. So again, keep that in mind. The area that we had marked was 1600. This level is the 1620 level that we have marked. So keep that one in mind. And if the price is not able to break down through this level, we are looking for another move higher, but it breaks down, we're looking for a move to the downside. So that's euro. Let's look at pound. Pound here was another one that got impacted by the central bank. We had a nice drop and a continuation drop here. So in this case, Bank of England was not quite as hawkish as the market had expected. And we discussed this in our daily analysis call. We were not expecting them to be as hawkish, in spite of what some of the central bank, or Carney had said in his previous speech, because there's still Brexit that's looming ahead, right? So that has not gone away. As a result of that, that's what Bank of England was a little bit concerned about as well. They were not as hawkish. So what we have now is a bearish candle close on a weekly. So as a result of that, we are looking for a move to the downside, and we are looking for a follow through on this. The target in this case would be, let me just remove a few. Okay, so this is where we are. So the target in this case is 1.2820 level, so bottom of this little range that price had traded in a while. We're looking for pound to go down, so that is bearish. Yeah, I'm looking for further bearishness in the British pound because of the candle close. So here we have had 2 days of price dropping. So in this case, the type of behavior I would look for would be, let me just try it out, pull back and then drop. First target is this 129.50. Second target is 128.20 level, this right here. So that's the move I am looking for. So I'm bearish on British pound. So we could get a pullback into 131.20 and then a bounce off of that into 129.50 and then 128.20 level. So bearishness in the pound. Aussie dollar. Aussie was, like I mentioned before, Aussie RBA was not as hawkish, even though they said the economy has been improving and things have been looking better. But we're not seeing the same. They're not expecting it to continue as it has been at the moment, so they have concerns about it. So that's why we are looking for. That's why we saw the Australian dollar drop, and now we have a bearish candle here. So it's not a completely engulfing candle at this point, but this is bearish right now. So just a quick question about pound dollar here. Somebody mentioned, is it a head and shoulders type of pattern? It is a head and shoulders type of pattern. So we're looking for, so this is your head, shoulder, left shoulder, right shoulder. Yeah, so that would be head and shoulders. Okay, so going back to Australian dollar here, so it's not completely engulfing candle. If it was completely engulfing, we would totally be bearish on this. So right now I am bearish on this, but in terms of our levels, so let me get rid of some lines here and we'll move them up. Okay, so this is what we are looking for. This is where the first this is where I'm looking for, this is what I'm looking for price to do, kind of drop into this level here, and this will be the decision point because this is our previous high. If the price stays above this level, we could go and see a retest of this 80-50 level previously. If the price, and this is again like euro that we were looking at, if the price drops through 78.30-ish area, which is right here, then we're looking for a pullback into 77.50. So right now I'm looking for further bearishness in Australian dollar. First target 78.30 level, second target 77.50. So looking at the daily, this is where we are. So I'm looking for price to, so first price needs to break through this level, this range that it has been in a while. So once it breaks through this range, we're looking for a break and then further move into this level. And this is where the decision point will be. As you can see, big support and resistance here. If the price holds above, then we could see one of these moves to the upside. But if price breaks down, then we have all of this open area and price could move lower. So in terms of our bias, my bias is to the downside in Aussie dollar. 78.80 level will be the first target, 77.50 as the second target. And then we will see what happens at 77.50 level. Once price gets there and we see our patterns, that's when we'll make a decision. This one, New Zealand dollar, this is a nicer candle in terms of a weekly close. That's a bearish engulfing candle. And based on our bearish engulfing candle, I'm looking for further move to the downside in this one. And for this, the target will be 0.7200. So we are at 74.13 right now. So target will be 0.7200. Here we are. This one looks, New Zealand is just like euro and pound. Pound is more bearish than euro. Same with here as well. New Zealand at this point is more bearish than Australian dollar. Here we have seen actually a move lower, whereas in Australian dollar, we are seeing a range bound move on the daily basis. So here we have seen a further move to the downside. So we're looking for that to continue, looking for price to maybe do one of these, drop, and then do this move. So this is our first target, 73.80, second target, 7,200, which will be basically the bottom here into this range here. So bearish on New Zealand dollar. Dollar CAD. Dollar CAD has had a huge drop because Bank of Canada started talking about raising rates, and then they actually did raise rates. As a result of that, we saw a big move to the downside. Last week, we were looking for bullishness in this, which we got here, and now In terms of our weekly close, that's a bullish engulfing candle. We are also into these previous lows where we haven't been since April of 2016, so that is a major support level. Now, since we have had a bearish engulfing candle here, we're looking for a further move to the upside. And our target here, this looks like a good target, good resistance, which turned support, and it showed activity here as well. So this is 128.30 will be the target to the upside. So here, this is where we are. And basically, we're just looking for it to continue higher. So this is the current level. And in this case, the move I'm looking for is first we need to see a clear break of this 126.80 level. If the price breaks through, looking for price to hold on the other side, and we are looking for a long, I'm looking for a long opportunity into 128.30. So that is bullish for dollar CAD. All right, Euro Swiss here. Swissy has been very weak. Euro Swiss has gone up quite a bit. And right now, I'm looking for a further move to the downside into this range, though. So the target for, actually, let's go to a weekly here. So this shows that there is a rejection, that sellers are stepping in. So on a daily basis, I'm looking for a move back down into 1.1380 here, looking for a further price drop. And this will be a critical, because Swiss franc is not as strong right now. So this will be the critical level. If it breaks below, the second target will be 1.1280 here. However, this could just give us another one of those retracements and then further move to the upside. So this is what we'll have to be careful with. So 1.1380 will be the first target to the downside, and that will be a decision point for a move, further move beyond that. Okay, so this is Euro Yen. Euro Yen, we are here we are. So this here, price tried to break above here. We did get that push up higher. However, now this looks like a pin bar here. We have a big rejection tail at the top, and this could come lower. So I'm looking for price to move lower in this. So the target here is the bottom of this range. So we're going to trade this as a range bound move. 128.50 will be the target in Euro Yen. If we take a look here, this is what we are saying. Price has closed with a nice bearish candle on the daily, and now we could get a pullback. So the best place that I'd be looking for sell here would be the top here, 130.80. If the price goes into that level, this is kind of where I'm looking for price to sell with stop above, and looking for it to move back into the bottom of the range, 128.50. So I'm bearish on Euro Yen. Let's take a look at Pound Yen. Pound Yen looks quite bearish here. This is where we are as a result of the central bank. We have seen this come lower. So the first target, so this is bearish as well, Pound Yen. I'm looking for 142.50 as the first target. And this week, actually, we may just get there. So the second target will be 140.20 level here. Let's take a look at the daily. This is where we are. Very nice pin bar on the daily here. And as a result, we are looking for, we may get one of these pullbacks into 144.80-ish level, and then looking for a drop here in 142.50. So that's the first target for Pound Yen. We are bearish. Okay, and then let's take a look at Dollar Yen here. Dollar Yen, we have a bullish candle on the daily here. So this is our doji. Not the best weekly close here. Price opened and closed or exactly in the same spot, and we have rejection from the bottom here. So not the best best pattern to trade, but in terms of our where it's going, it's still holding its bullishness. As we can see, price has been making higher lows, and that shows bullishness. So looking at the daily here, this is where we are. We have a bullish engulfing candle, so we could see price go up higher for dollar yen, but it is not as clear as some of the other ones. So it will depend on how the US dollar performs. If the US dollar is strong, we are likely to see this go up higher. But right now, I'm going to treat this as a range bound because it has been in this range for a few days. The whole week it's spent in this range. So at this point, the target is 111. And if the price breaks up higher, if the price is able to break through this 111 and stays above, then next target would be a 112, which is the top of this pin. If it doesn't, if it fails to break, then we are looking for price to come back down into a 110. So this will be the critical decision point. So the break, we're looking for a break out of the range, and whichever way it breaks out of the range, that will be the next level we'll be watching. If it breaks, so let's say if it doesn't break above 111 and gives us a sell signal here, then we're looking for price to continue into 110 and into the trend line here. So it will be a 109.50 will be the target then. And if it bounces off of, it could bounce off of this trend line here. So again, one of these, not the clearest signal, and we'll have to trade it as a range bound and play it by the ear. The next one, Euro Aussie. This is our last one. Euro Aussie, it has been in this range now. So at this point, we can, okay, so here we are. We were bullish, and then now we have a big indecision type of candle, neutral candle, I should say. So we have a big pin on the top, and the candle body is approximately the same size of the pin. So it is bullish to neutral at this point. So looking at, so in this case, the targets are the range that we are looking in is pretty big here, 150.80 to the upside here, and 145.60 to the downside. So if you go into the daily, this is what we are seeing. We are on this lower trajectory. So overall, the bias is to the downside. In this case, on the daily basis, we have a bearish engulfing candle, and we could look for a further move to the downside. The first target here that I'm looking for is 146.80 level. The move that I would anticipate here would be one of these. Price goes into test this level here and then drops further. We may experience some challenges over here, which is 148 level, and then looking for price to move down into 146.80. So that's the type of move. Overall, the bias is to the downside. We have this trend line, and we have bounced off of the trend line once again here. So I'm looking for further move into 146.80. All right, any questions? Oh, somebody had asked about the gold chart. Let's take a look at gold. Gold, we are into an important level. This is our gold. So based on the daily, based on the weekly, let's take a look at the weekly. So it looks like weekly we are seeing for the basically last 2 weeks, it's a wash. Price went up, price came down. So let's take a look at the daily here. It is a range bound level or a range bound move at this point. But we do have a big bearish close for the day, and especially if the US dollar goes up, we may see this go lower. So at this point, we could get a pullback into 1260-ish level, and then looking for a drop back down into 1250. And 1250 will be the critical level because this is our previous support resistance here. If it breaks through 1250 level, we're looking for 1243 here, 1243.80 level. So this will be the target over here. Right now it is range bound. If it doesn't break 1254.80, we're looking for price back into the top of the range. So I'm going to treat this as a range bound market because it hasn't, for the last 2 weeks, price has stayed in this range. So in a range bound market, we're looking to sell at the top, looking to buy at the bottom. till such time that the price breaks out of the range, and it will break out to either side. So we'll have to see which way it breaks out. If it breaks out lower, we are looking for 1243.80, and if it breaks out higher, then the next target would be here, 1280.44 level. So Walter, the question is, you did a pending order for New Zealand US dollar on non-farm payroll on Friday. Yeah, that's good because it came in as a higher than expected. So short would have kicked in, that's correct. New Zealand rate announcement. Yes, you could do a pending order for rate announcements as well. Just be careful with the press conference. So press conference is an hour later, but in the meantime, the trade should play out by then. And you should be able to move your stops and such, because during the press conferences, when we have we can see whiplashes. So we can see price go one way, and then there's another comment that comes out, or based on a response to another question, which can push the market in a completely different direction. So I would be careful with the press conference, but you can straddle it. You can do pending orders ahead of the news announcement. So if it goes up, they're not going to raise rates, or they're not expected to raise rates at this point. So if it's negative, then chances are New Zealand dollar will drop. If they're not as hawkish, if they come in anything like RBA did for Australia, we are potentially looking into a drop then. Any other questions? Excellent. So it looks like that's it. So we will call it a wrap, and I'll see you guys next week.